In recent months, markets have been sending a very clear message, even if very few are truly listening. On the surface, everything appears under control: elevated prices, compressed volatility, and an apparent sense of stability. Beneath the surface, however, something very different is building: leverage. Today, leverage is not only present, it is widespread and increasingly concentrated. Margin debt sits at historically elevated levels. Derivatives exposure remains high. Positioning is often one-sided, and implied volatility continues to stay low. This combination does not signal strength. It signals complacency. And in financial markets, complacency is always the phase in which risk quietly accumulates. The mechanism is simple but frequently ignored. When volatility remains low for extended periods, leverage naturally increases because risk is perceived as manageable. Position sizes grow, stops widen, and hedging activity declines. As long as prices continue to rise, this dynamic feels sustainable. But leverage does not disappear. It builds silently and makes the entire system progressively more fragile. When a large number of participants are leveraged and only a few are properly protected, markets do not need a major fundamental shock to destabilize. They become vulnerable because the structure itself can no longer absorb stress. A relatively small catalyst, a shift in expectations, or a sudden expansion in volatility can turn apparent stability into a rapid chain reaction. This type of risk cannot be identified by looking at price alone. It does not appear on standard charts. It is rarely addressed in optimistic narratives, and it tends to be ignored precisely when participation is at its highest. Yet this is where the most violent market phases are typically born. This is the context in which private office was created. Private office exists to analyze what lies beneath the market, not just what appears on the surface. It is not about forecasts or opinions. It is about reading leverage, positioning, volatility, consensus, and market structure in order to understand when risk is truly controlled and when it is simply being overlooked. Private office is not a signal service, and it is not a traditional commercial product. It is a space dedicated to interpretation and clarity, designed for those who want to understand before markets react, not after. It is a place where capital is treated first as something to protect, and only then as something to grow. Access is free, but intentionally limited to 100 members. Not to create artificial scarcity, but to preserve depth, quality, and a level of dialogue consistent with a professional approach. Private office is built for those who take capital, time, and decision-making seriously. In an environment where leverage is elevated, volatility is compressed, and consensus is widespread, understanding matters more than participation. Understanding how risk is building. Understanding when exposure should be reduced. Understanding when doing nothing is the most rational decision. If you believe that investing without understanding leverage is a risk you no longer want to take, you can request access to private office. Places are limited. Clarity is not. Click the link below to be part of our private office.